Precious metal markets have been front and center the last couple of days here at Infinity Futures. We're looking at Infinity AT charts on the left and a couple of trading ladders on the right, and we're going to talk about gold today. Gold futures contract's been around a long time, traded at the NYMEX sub-exchange of the CME Group on Globex, the electronic exchange that powers most of the trades through the CME Group. The contract you're seeing right now is the August contract. And so the symbol is GCQ0 for the gold contract. And then there's a micro gold contract, ticker symbol MGCQ0. And micro is 1/10 the size of a standard gold contract. Now, one of the ways to know what the front month is going to be is to take a look at the quote board itself, which I have up here right now. And we're in August, but we're about to switch to December. I know it seems kind of odd because there's an October contract, but we're going to blow off October and go right to December. That's where the front month is. That's where all of the volume is going to be. So if you can see this, you might have to squint a little bit, but if you're going to look for the micro contracts, MGC or MGCZ, which is December, and you go all the way across, you see the volume's almost 1-to-1 right now. It's 123,000 versus 101,000. And if you just want to look at the regular gold contract, the GC, and then the December contract GC, go over and you'll see about 400,000 in the August and 123,000 in the December. So it's about 3-to-1 still in the August, but by Friday that's all going to be different, because remember, Friday is first notice day. July 31st is first notice day, the first day you could actually get assigned a contract. And in gold, contracts are assigned, they're physical, right? You could actually have gold delivered to your house, or you might have to deliver gold, not really to your house. You'll get a certificate in the mail, but a certificate of storage. But in any event, you don't want to be delivered in most cases, and you would like to trade them from a day trading point of view. And they're very day tradable. You can see the volume, the bid-ask spread's pretty decent on the gold contract, the classic as well as the micro, and they move in sync. Same contract, just different size. You can see the pricing is identical. On the actual classic, each tick is worth $10. Let's just go ahead and place a trade in there real quick. And again, I'm just randomly doing it on a simulator. And you'll see I just went ahead and bought one at 19.29 and 20 cents, and as it moves up and down, it moves by $10. You can see that way at the bottom here, $10 per tick. Each tick is worth $10. Alternatively, on the what I'm going to call the micro, well, it's not what I'm going to call it, it's what everybody calls it. That's what it is. I'm going to go ahead and do another trade on the opposite side, and you'll see that it's only worth $1, right? So we just popped up 4 ticks here, minus $4, minus $2, as opposed to the $10 size. So either one, the volume's pretty good in both. Either one you want to do, you could participate. And remember, we're looking at the August contract. Pretty much by Wednesday or Thursday of this week, we're going to be all front month in the December contract, which is going to be Z instead of Q. It's going to be Z. And you could chart it and trade it right now if you like. There's still plenty of volume there as we get through rollover. So rollover will be complete by Friday. So the two takeaways of this tip of the week is, number one, we're rolling from August to December. And number two, you have two different varieties of gold contracts that are basically identical, and you could have a contract for bigger accounts, a contract for smaller accounts, and you could trade fractionally, right? So maybe 3 micros equals 30% of a big gold contract. And so the math is linear and straightforward. Hope that helps.